Good morning, everybody. Scott Cheng here. I really appreciate you guys jumping on and watching the show. Wanted to talk to you about something that I think is really critical for a lot of people here. And that's basically the recent wildfires that were up in the Los Angeles area and how it affected so many people. So I brought Eric on this back on this channel, and we're going to talk about this, and he's going to help us give some legal advice, figure out what we have to do in order to, at least try to protect ourselves in this kind of a weird situation. Hey, Eric, welcome.
Hey, Scott. Thanks for bringing me back.
Yeah, no, you're a co-host on this one with me. So I have a couple of things I want to show you, just playing before we have a conversation about going into in depth. And the thing is if you look, like this is Altadena, right? Look at all these homes in this area. And then after this wildfire came through, it just demolished the entire neighborhood. Like literally every city block was just burned, the entire subdivision. And it's very sad, obviously. And the thing is but what options do homeowners really have in this situation, right? So let me play this video for you about this one particular couple.
For many is finding a place to rent. California's Attorney General has announced active investigations against price gouging, and officials across the board say they will find and prosecute anyone trying to take advantage of the tragedy. In tonight's Prime Focus, our Jacqueline Lee has more on the struggle to find housing and those trying to put a stop to price gouging.
A war zone, ferocious, apocalyptic. These, just some of the words used to describe the utter destruction left behind in Southern California. But the devastation goes beyond what the naked eye can see. It's the emotional toll buried in these smoldering ashes.
This photo.
That's your street.
Yeah, that's our house. That was our house.
A lifetime of memories gone.
Embers coming off.
Tens of thousands of evacuees now suddenly without a home, desperate for shelter, sparking a real estate frenzy.
I've spent $8,000 already on Airbnbs.
Oh, wow.
Longtime Altadena resident Erica Lee, along with her husband and 7-year-old son, lost their home in the devastating Eaton fire.
It's been terrible. We've been bouncing from Airbnb to Airbnb, and we're looking for a place to rent, but everyone else is too.
So I hear this all the time, where these poor people who not only lost everything, they lost all their possessions, their home, and now they're basically being ripped off by, lowlifes who are trying to screw them over. I'm going to play you another video that I saw on YouTube, and this guy was literally trying to teach people how to take advantage of other people's misfortunes. And I want your opinion, Eric, after this, okay?
Through what happened, who is affected, what is happening in real estate because of this, and how I will be capitalizing on the situation and how you can capitalize on the situation as well. Now, we could argue about Gavin Newsom and Elon Musk and Trump and all these guys fighting back and forth, but that's not the purpose of this video. I just want to go through the facts today and then tell you how you can monetize, how you can capitalize on this situation. So, number one, 24 people have already passed away. It's horrible, absolutely horrible, but it's not as significant as in terms of the amount of people that have been evacuated. 300,000 people have been evacuated. What does that mean? That means those people have got to find places to stay. So what you're seeing in California right now is Airbnb prices have tripled. People are doubling rent just to capitalize on this. And I don't think that this is the right way to capitalize on the California wildfires, but that's what's happening right now. 300,000 people are evacuated from the area. 15,000 structures, that's homes, businesses, that's Starbucks, gas stations, 15,000 structures, totaling $150 billion in damages.
It is not only not a good idea, it's actually illegal. What's your thought, Eric, as an attorney?
Well, yeah, there's laws to protect against price gouging. I know the LA city and the county has Oh, there you go, you're putting it up there to report price gouging. Um, and so there are laws that's supposed to protect homeowners, and it's just the problem with these type of things is it's just a purely supply and demand issue at this point, right? When you have a catastrophic event like this where you have, as that video showed, $300,000 people are displaced, right? You're gonna have a huge influx of people needing to relocate, right? And where are they going to find housing, right? And we were already in a housing crisis before this catastrophic event, and this just exacerbated the housing crisis, right? And so unfortunately, when you have these type of situations, you're going to encounter people who try to take advantage, right? Well, you're gonna, if you want to live, have a roof over your head, this is how much it's going to cost, right? Because
Yeah.
someone is going to pay that amount of money if you don't, right? And that's the sole supply and demand. When you have a huge amount of demand and very limited supply, this is what happens.
Yeah, like that lady said, she paid $8,000, right? And how long has it been since the fire? Not that long.
Not that long,
Yeah.
right? Airbnb
So,
prices are through the roof. I've heard, Airbnb has had a program where they, give a voucher for a credit or something like that. Then I heard that people were complaining because that also turned out to be like a scam or something like that. Very limited in terms of where you can use it, how you can use it, So it's unfortunate, but there is, as you're putting it onto this video, a way to report these type of behavior, and hopefully the government, is going to investigate and prosecute the people that are trying to do this.
I heard from the LA County, the district attorney, saying that they are very serious on prosecuting anyone who has illegally overcharged. There is a website, and I forgot which one it was. I should have put it up. Where this one organization, it's founded by, I guess, a bunch of people, just people, and they're tracking all of these Airbnbs and all of these rental listings. And what they're doing is they're collecting this data, and as they find it, what they're doing is they're actually turning it over to the district attorney for prosecution. So for those of you who are thinking about taking advantage of the situation, my feeling is this: take a step back and realize that these people are human beings like you. And if you were in their situation, you would not want to be taken advantage of. Personally, I just think it's completely wrong. Like, so I'm glad there is prosecution of it. At the same time, I'm like, I understand what you said, Eric, which is supply and demand, right? And there's just 300,000 people that now need a place to live. But yeah, it's not an easy thing to solve. But yeah,
Right. Landlords, let's say you had a vacant property at that time, in LA County, that's listed on like Zillow, Craigslist, Rentals, and the market rent for a 2-bedroom condo, let's say, is $3,000, right? You're going to get a flood of applications. You're going to get probably well over 50 applications from people who are probably looking for a place to rent affected by these wildfires, right? These are all well qualified, and you can rent it out for $3,000, right? That's just that. Or from an economic point of view, you can say, well, I need to have some sort of way to weed all these 50 people that's applying for my vacant property. I got to jack up the price, right? 5,000, maybe it cuts it down to 30 people. 6,000 cuts it down to 20 people, right? 7,000 cuts it down to 10 people, right? So the logic in this is, I don't think, there are those bad actors out there that are saying, I'm going to purposely jack up these prices. But there's also a practicality to this. If you're a private landlord and I have a property and I'm going to get flooded with all these applications, I can definitely still rent it out for $3,000, which was the market rate before this catastrophic event happened, right? But then how am I going to choose between all these 50 people, right? They're all sending me sob stories or sending the landlord sob stories about how they're affected by it. But I can only rent it out to one family or one applicant, right? So I need to have some sort of, and the easiest way is pricing, right? To filter out, to at least allow the landlord to be able to, rent it out instead of having to deal with all these applications, right?
Okay. So to play the devil's advocate, what you just said, is it worth getting into trouble with the law to
No,
jack it up to like
no,
$10,000 and then now you're potentially putting yourself up for prosecution?
probably not. I don't. I mean, some people are more risk takers in terms of threading the legalities of something like this, right? Um, I would leave it up to the viewers to determine if that's something that they want to be on the
Take
facing
the
end
risk.
of. But the reality is you can, like, the government is gonna say these things. Absolutely, we're gonna prosecute these people to the full extent of the law. But in the immediate, time being, someone that has lost their house, someone that they need shelter,
Yeah.
right? They need shelter. They can't wait until some district attorney, starts prosecuting this person
Months
for
later.
price gouging, and then wait to rent out. That's the whole point. In practicality sense, you know, you still got to find a place to live.
Yeah, absolutely. I can't disagree with you. I found this from Core Fact actually. And this is basically the damages that were from all the different wildfires in the different regions in California. I mean, the LA wildfire that just happened. I mean, almost $200 billion. The number is just staggering. I mean, it's so big that you're like, are there any additional insurance companies even like, right, putting properties on the market? And so to that effect, this is why we are here today. We're going to talk about insurance companies. What are the options that homeowners that are affected by this wildfire, what options do they have? And then secondly, those of us who aren't affected yet, right? Because it didn't happen to them, or maybe the lucky few that they're in LA that didn't have their homes burned down when their neighbors did. Um, what are their options, right? And so we did a little bit of digging, and we found that these were actually the most recent insurance companies that have either paused or left. And you were telling me State Farm recently raised their rates, or asking the insurance commissioner to raise their
Yeah.
rates.
So California, how it works is the Department of Insurance caps how much companies can charge for homeowners insurance and how much they can raise each year. State Farm has recently petitioned the Department of Insurance to allow them to increase their rates by 25% because they're saying that this catastrophic event is basically, putting them in a very financial stressed position. We'll see what happens to that. There's a other side of the argument where there's a lot of consumer protection organizations that saying State Farm is not in that kind of dire financial situation, and they're just trying to, get more money to cover, what they're going to be paying out from other homeowners. We'll see what California does with that. Um, but yeah, any insurance company that's facing this type of catastrophe, I can't imagine that they're going to be like, oh yeah, we're okay financially, right? Any business that's going to be paying out that kind of money is going to take a financial hit.
Yeah. And the thing though is I mean, State Farm is a national company, right? So it's not just that they're petitioning California insurance to allow them to, raise the people in California's insurance up 25%. Chances are this could have a ripple effect throughout the country. State Farm could theoretically raise insurance premiums for everybody, right?
Theoretically, yes. So insurance laws are very state by state. There are certain states that don't have restrictions on how much insurance companies can raise rates. In which case, if one year they've had some sort of hurricane or some natural disaster, next year they can basically increase it to cover those losses, right? California is just one of those rarities that, we've passed laws to basically restrict this, to keep insurance companies from increasing those rates to cover the risk, which is also why you see California, the insurance companies saying we don't want to do business in California, right?
Correct. They're leaving and they're pausing and et cetera.
Yeah, they're saying, look, it makes no sense. This is a bad business decision for us to remain doing business in California.
Yeah, and I think to that effect, you and I had a conversation a little while ago, which was like, these companies are for profit, right? They're for profit. They have shareholders that they have to report to. They have things they have to make their balance and their bottom line look good to their shareholders. And so the thing is, and you had mentioned this. So kind of walk me through the thought process of yourself of, if insurance companies, let's say, were not for profit, whereas, all the premiums that were collected would be invested and saved to pay potential payoffs like this. How does that look like?
Well, then again, for a like a not-for-profit model where they're not looking at increasing shareholder value or investments, right? Then theoretically, the businesses would allocate, not be focused on profit, but rather those profits or the pool of money that they obtain from premiums, more of that would be either saved or moved into actually paying and covering these, catastrophic events, while also keeping premiums at a reasonable amount, right?
Yeah. Well, in that way, isn't the FAIR Plan kind of a nonprofit way? But the FAIR Plan is also at risk of going
Yeah.
bankrupt potentially with all of this. And for those of you who aren't familiar with, the FAIR Plan is basically, it's the insurance that you buy when you can't get any other types of insurance in the state of California, right?
Correct. So the FAIR Plan is basically government subsidized insurance, still a private company, but it is highly funded and regulated by the California state government. It is operates very similarly to, to like a nonprofit or a not-for-profit type of insurance company in theory. But then see, the FAIR Plan, the pool of people under the FAIR are also the highest risk, right? So that's where the risk of the FAIR Plan comes in, and why currently it's on the verge of insolvency is because the people that can't find normal insurance are then moved towards the FAIR Plan to find insurance. And guess what? That pool is already, at a high risk level because they couldn't find normal insurance. So their properties are already subject to probably a greater risk of something happening. And so when you are trying to insure a pool that is high risk, that puts a lot of strain on something like that, right?
Yeah.
A FAIR Plan could work theoretically if everyone was on it, low risk, high risk, right? That's the whole point of insurance. Insurance is where you pull everyone together to diversify and spread out the risk. So even though portions of the pool may have experienced something, you have other people that are still able to put in their premiums to cover whatever losses the insurance company is having to pay out, right? It's pulling the risk and diversifying the risk. That's the whole point. That's the theory around insurance.
Yeah. So let me ask you about this. Let me show you this, share with you this one thing where it's a video and it's a news report basically talking about California is issuing a 1-year moratorium on cancellation in the fire areas, right? I'll play this and then I'll let you give me your thoughts.
Thousands of Southern Californians suffering losses from the Palisades and Eaton fire. They are now starting that daunting process of filing insurance claims.
California's insurance commissioner providing some relief, banning insurance companies from canceling or not renewing homeowners' policies for a year. And Eyewitness News reporter Carlos Granda is live now outside of our studios in Glendale with the details. Important story, Carlos.
Absolutely, David and Colleen. Right now, the estimates of the losses for these fires are staggering, estimated at about $20 billion. The insurance commissioner, as you said, is banning cancellations, but he says people who are affected need to start gathering their documents to get ready to file claims right away. As the Eaton fire ripped through this neighborhood in Hastings Ranch, Lynn Levin Guzman's frustration summed up how many feel. She was there trying to save her parents' home of 75 years.
And they've had the same insurance, and these insurance people decided to cancel their fire. And we're going through this, and it just happened, and they have no fire insurance.
Imagine being in that fire and knowing if the house burns down, there's nothing you can do. Insurance Commissioner Ricardo Lara in Los Angeles today issued a moratorium to stop non-renewals and cancellations. He also wants to backdate that to October 9th.
This means that if you've received a non-renewal from your homeowner's insurance between October 9th and January 7th, essentially 90 days, your insurance company should do the right thing and retain you as a valued policyholder.
These are the numbers for insurance policy cancellations. In Pacific Palisades, 10% of homeowners and fire policies were not renewed from 2020 to 2022. And in Altadena, 8% of policies were not renewed. For those with insurance who fear their homes are destroyed, Lara says homeowners should start gathering documents now to file any claims with their companies.
Start documenting every conversation. I often tell survivors, even set up a new different email where you're getting all your emails around your insurance recovery policies so that you could keep that and track that and document that. It's critical.
And be very careful if anyone approaches you saying they can help. Unfortunately, Commissioner Lara says this is the time when fraudsters come in to try to take advantage of people when they're most vulnerable.
Do not sign anything under stress. You have out-of-state adjusters that make false promises that don't know California law and how we protect consumers here. And then under duress, you're signing things because you might want to get 60% of your money quick. But when you're entitled to 100%.
So, wanted your opinion about what we just heard. So, I mean, the moratorium, 1 year. I mean, my initial reaction is, so what, right?
That's my reaction too. I was like, this is a great publicity stunt, but it doesn't do anything.
Yeah.
It doesn't do anything. If you already don't have coverage during when this event happened, okay, you don't have insurance. A moratorium to prevent something that has already been canceled doesn't help you. Yeah. Now, if you have existing insurance for that one, and then for that 1 year period where the insurance company, that's fine. You would have already been covered because you had existing insurance. And then the homes that were the insurance company were planning to renew to drop you, fine, for that 1 year they can't do it. And then thereafter they can still do it, right? So I really don't see, this is just, personally, I feel that this is just, again, the insurance commissioner or the government issuing a press release to make it look like they're trying to do something. In reality, that it really doesn't do anything.
Yeah. So if, you know, with the situation of these homeowners, like that one lady whose mom didn't have her insurance, she had it canceled, and then now I think her house burned down. Like, anything she can do? Is there any recourse that she can go?
Well, you can still file an insurance claim, right? Probably gonna get denied. There's government like FEMA. FEMA does have, programs to help homeowners recoup some of their losses. There's one thing that the insurance commission that they said they're trying to retroactive it back to October. I don't know the legalities of that. Again, these are all private companies, right? Can the government force an insurance company to backdate a policy? Because you sign these contracts, right? This is
Yeah.
just clear cut. You're insured from this period to this period, right?
Yep.
And once it's past that period and something happens, I'm sorry, the insurance doesn't legally contractually have to cover you, right?
Yeah.
Can the insurance commissioner then always tell, hey, State Farm, I know you guys didn't renew with these people, but we're gonna force you to have to cover these all the way back to October, right?
Yeah.
But if your insurance company dropped you before October, well, you're SOL at that point, right?
Yeah. And then the thing is, I mean, I understand where these insurance company commissioners and government are trying to intervene to try to help these homeowners. But the more I think they try to intervene, the more they're going to drive the insurance company out. Because at the end of the day, the insurance company is a for-profit company.
Yes.
If they're going to lose money, they're just going to be like, forget it, I'm out of here.
Yeah, right. You can have a moratorium for 1 year, but doesn't help the people that are buying houses or selling houses and buying new houses, try to get new insurance company, because these insurance companies says, I'm not issuing new policies. I'll just deal with the 1 year existing policies that I have in the state. After that 1 year, bye. I'm not dealing with this anymore in California, right?
Yeah. And so there's another thing recently, the San Diego, particularly because you and I are both here in San Diego, they recently are working on passing some bills here locally, and I want to share that with you and then get your feedback as well.
Insurance companies that operate in California have to participate in what's called the FAIR Plan. That is a pool of money that insurers pay into. It provides fire insurance for properties that can't get it other ways.
Right. If you can't get traditional insurance, you at least have FAIR Plan backup. But if losses from a disaster cost more than the plan has, insurance companies pay the difference, and that can get passed down to you as a surcharge. Here's NBC7's Joey Safchuk.
Homeowners, especially in fire-prone neighborhoods like this one, are concerned about their insurance rates going up. Well, one San Diego Assembly member in Sacramento hopes that his timely new bill will soften the blow and keep insurance companies here in California. Ken Smith made sure to get his steps in early Monday.
Because I have a weather report that says, by 3 o'clock, it's going to be 17-mile-an-hour winds. And if that happens, we could have an event.
An event like the 2003 Cedar Fire that scorched these streets.
For us here in San Diego, we're worried about what's going to happen when the winds come up. And if the fire sparks, what's going to happen here is going to be 03 again.
His house was spared, but neighbors were not so lucky.
We walked right up this street. We saw that one down and that one down and made the turn. And there's a couple of houses, 1 story, and then 8 houses were down.
The fires in LA also hit uncomfortably close to home. The veteran is from Pasadena, near where the Eaton fire flared.
I grew up there. And so it's just terrible.
And while people like Smith in Southern California are on high alert, lawmakers in Sacramento have introduced legislation to keep insurance rates as low as possible.
Now, with the cost of rebuilding and the cost of paying these claims, the magnitude of them is just tremendous. Our eyes are now more open.
San Diego Assembly member David Alvarez introduced the Fair Plan Stabilization Act late last week. It's a new tool that allows insurers to borrow money from investors so that they can pay out claims without going bankrupt.
Consumers win because we get our claims actually addressed so that people can rebuild. And insurance companies don't lose because they're able to pay this over the course of time.
Alvarez hopes his bill will prevent insurance companies from fleeing California. And they're not the only ones at risk of leaving. Smith loves San Diego, but expects his rates to keep climbing.
Maybe we'll get priced out. Maybe I'll have to move. Maybe I'll move closer to my 3 kids and the 9 grandkids.
Joey Safchuk, NBC7.
The bill has to go through the legislative process, but if it passes, the governor signs it.
So I wanted to see what your thought is, right? So this San Diego Assembly member is trying.
What's interesting is that it's allowing insurance companies to get investor money to pay out and potentially soften the blow, right?
Okay. So what's your thought about that?
Maybe it does. Maybe it doesn't. It's hard to say whether or not these insurance companies, oh, okay, now I can get investor monies to soften how much we're paying out, or whether they say, look, I just don't want to deal with California. Okay, this is just another regulation. This is just another, having to deal with the bureaucracy that is already very cumbersome. I might as well just not do business in California, right? There are other states, Texas, Florida, non-progressive states that have very little regulations regarding insurance that they are very profitable in, right? So
So you're meaning like the insurance company would just go there, do business there,
yeah.
and be like,
Yeah,
forget California.
well, forget California. There's so much red tape. There's already so much red tape in California. My God, jeez. Like people just think passing more and more laws is going to solve these problems. No, it just makes it worse and worse for people that want to try to solve these problems. Like,
Yeah. Well, I mean, there needs to be a solution. We can't just throw up our hands and say, I quit, right?
Needs to be a solution. Yes. Okay. I'm a lawyer. I just follow the laws. I wish I could make the laws, but I just not.
Yeah. Well, I mean, like, for example, there's currently 350,000 Californians that are now on the FAIR plan. And like you said earlier, these are the most high risk individuals also, because of where the location of their property is, right? Typically they're right next to canyons or wild vegetation. And like the most recent fires, I mean, the LA fires, if I'm not mistaken, were actually caused, we believe, by homeless.
Yes, correct. The city is saying the three ones that I know of, the Rancho Bernardo one, the one on Friars, the one I think in Mission Valley, was it Mission Valley? I forget. All of them was reported to be homeless people that caused the fires.
Yeah, correct. And that's the other thing, because I mean, like some of the Cedar fires and stuff like that back in 2003 was caused because of electrical and the San Andreas winds blowing, right? And causing the power lines to arc. But the three that we had recently in San Diego, yeah, I mean, how do you solve that? I mean, thank goodness San Diego Fire Department.
Oh yeah, shout out to the SDA Fire Department. They put out those fires very quickly. Our office is very close to the Rancho, or it's really close to the Rancho Bernardo one.
Correct.
And,
yeah.
I saw the news as, oh, they stopped the forward progress. I was like, wow,
Yeah.
that's very quick.
Yeah, no, they did a great job. Absolutely. There was no doubt there. So, I mean, again, right? Probably not a lot of solutions, just a lot of questions.
A lot of questions. Here what I'll tell viewers, all right? When you hear of these type of events happening, it's number one, and I get calls on 2 to 3 times at least on average each week, right? From people affected by the fires. The people that luckily not affected, I think now is a good time to check your insurance policy and understand it in the event of something like this happening, what it is that you're going to get from these insurance companies, right?
Yeah.
If you are still covered, then there is a contractual and legal obligation, right, for the insurance companies to make a payout to you. But what is that payout, right? You got to understand what you're going to get. There's something called cash value versus replacement value, right? And you have to understand cash value, if your policy entitles you to that, that's basically to pay you the value of your home, right? So if you have a $1 million house, it's worth $1 million, right? The cash value of that house that the insurance company that's insured for will pay you $1 million. Now, very rarely do I see those type of policies, right? What's more common is what I see is called replacement value, which is they will pay for the cost of rebuilding your house, right? They have estimated the cost of rebuilding your house maybe $250,000, and that's what they're going to be paying you to rebuild your house. Sometimes there's a guaranteed replacement term in there, which is because in these type of situations, because of everyone's looking for contractors, the cost of replacement is going to increase substantially. And if you have a policy that guarantees replacement value, regardless of how much it's going to cost to rebuild your house, the insurance company will still pay you, right? Outside of that, you also have your personal property coverage, right? And oftentimes I tell people, now is probably a good time to start inventory what assets, personal property you have in your house, right? If you have some like collection like I do, if you see in my background, that's sneakers that's worth quite a bit of money in certain cases, and you want to make sure your coverage for in the event of something you lost some collection or collectible is going to cover that, right?
Yeah.
So I always say, homeowners, when you hear on the news that something like this happening, check your insurance policy. What is it that you're covered for? Is this something that you need to call your agent and be like, hey, look, I want to alter my policy, right?
Correct.
Most people don't do this, especially when you buy a house, right? I know, Scott, whenever you assist people in buying houses, right? Insurance is one of those required items. But honestly, how much out of everything that they need to do in a real estate transaction, how much do they pay attention in terms of the insurance, right? They just need to get it done so the loan closes and they get the keys, right? They don't really look at exactly what I'm getting covered for. Is it going to be sufficient to cover me in some, catastrophic event, right?
And well, that's the job of their insurance agent, to help them walk through it. I mean, to figure out what additional riders they may need because their unique situation, and all of that detail. But again, it's just like when I represent a client for real estate, my job is to protect them in the purchase of the home, making sure everything is correct with the home. At the end of the day, it's really their insurance company that should, or insurance.
Theoretically, I mean, most people, I don't like, and circumstances change, right? Policy limits that you may have had when you initially bought the house may not be adequate 10 years down the line, right?
Correct.
Especially all you did was just renew and not really look at, all right, what's my deductible? What's, my replacement value? Should I increase my personal property coverage? And all that. So it is a good time for people to really double check what their coverage is, because honestly, we are in a period of time where natural disasters does happen, and that's one of the risks of home ownership.
Yeah, correct. And the thing is knowing what happened, for example, in COVID. I mean, prices just went through the roof after that. So you have to make sure that your insurance is enough to cover the replacement cost at the new price, not just what it was, prior to COVID, right?
Yeah. So you got to make sure your replacement value, and this is very important. Like I mentioned, guaranteed replacement value. There are certain policies out there that have that in there. So in the event of something like a huge, natural disaster affecting a lot of homeowners, the labor costs, material costs are all going to go through the roof, right? So you don't want to be stuck with, a policy that doesn't have that basically says, I'm capping it out at $250,000, even though to rebuild your house is going to be $400,000, because at that time you're going to make up that difference, right? Yeah. Right.
So I also want to interrupt. I'm sorry to interrupt you, but I wanted to share this because when the fire happened in San Diego, over by Rancho Bernardo, because it was so close to our office, I jumped on this app, and I highly recommend this. This is a free app that I found online, and it's basically called Watch Duty. Are you familiar with this, Eric?
No, I'm not. I'm curious. What is this?
So basically, this is it's a really cool app, because what you can do is you can download it on your phone, and then what happens is as you zoom in, it shows you where the risk is, where the evacuations orders are. It gives you an update on the fire. Like right now, if you zoom down to San Diego, for example, it doesn't have anything. But when the Rancho Bernardo fire was here, we saw where the risk was, and potential evacuations. It gives you a lot of good alerts. And this is an app absolutely free. You can just download, and it was very helpful. I mean, during the fire down here, I was glued to this thing nonstop because I was worried about our office, right?
Mm-hmm.
And so, for our viewers who are looking, it's called Watch Duty. It's a really good resource that I would just recommend you download on your phone, so that way when you have any questions, if there's a fire near you, you can monitor it.
Yeah, that's great for monitoring local wildfires.
Yeah.
That's fine.
Yeah. So the other thing I have a question to you, I wanted to show you this last bit is it talks about the fair plan and the coverage and coverage gap, right? And we discussed a little bit about diversification of your real estate, but there are people whose homes, I mean, exceed the coverage of the fair plan, right? And so let me play this real quick for you. Oh, no audio.
7 on your side, Stephanie Sierra is here with us, digging into this for us and has more. Stephanie.
Yeah, as you both know, this is certainly not a new problem. As California's insurance crisis was already at a breaking point prior to these fires devastating Los Angeles, now the state is bracing for another hit impacting the housing market.
These wildfires are going to be far-reaching on consumers in the market for many, many years to come.
Amy Bach with United Policyholders explains the California Fair Plan, the state's insurer of last resort, is only as strong as the number of admitted insurance companies we have doing business in the state. A number California has seen decline, with at least a dozen insurers pulling out or restricting new policies.
There's no question there's going to be a lot of people who were impacted by this fire whose insurance falls short.
For example, the California Fair Plan caps insurance payments for natural disasters at $3 million for residential policyholders. That price tag affects at least 33 Bay Area cities, where the average home value now exceeds $2 million. That's according to data from Zillow. So what impact could this have on the housing market?
With the cap being at $3 million, you're talking about a high percentage of homes not being able to get coverage up to a certain amount. That's going to drastically change how the market's going to be moving forward.
Neil Canlis owns a real estate company that tracks market trends across the Bay Area.
We're losing a percentage of buyers because they can't get a policy or the policies are too high in price. You're already paying the mortgage, you're already paying the property tax. And then all on top of that, if you have to pay a $10,000 home insurance policy, that's $850, $900 a month.
Canlis says if the $3 million cap is not raised,
the market's going to slow down even more so. And we're already seeing the highest interest rates that we've seen in a long time. The Fed has already said they're only going to drop the rates twice in 2025 and probably only do it by a quarter point each drop. We're looking at still high prices, higher interest rates compared to where we were the last 5 years, and insurance policies being extremely high or not available.
Now, bottom line, if you're lucky enough to get a private insurance policy, premiums are expected to go up as high as 40% on average, even if you don't live in a high-risk area. And if you do, that figure could double or more. As for the California Fair coverage,
40%.
Right. So look, here I'm going to tell you, I'm already seeing an effect on home values because of this insurance issue. All right, I'll give a personal example. Okay, I have a condominium. All right, it's actually in Rancho Bernardo. Right, the HOA is supposed to have their own insurance policy to cover the roof structure. Right, that's the point of a condominium HOAs. Right, they need to have coverage per the bylaws, per the CCNRs. Right, at a certain amount, right? And because the condo and this community is in a high risk of fire, they are unable to obtain a policy to meet those. So we had to amend the bylaws and CCNRs to basically get less coverage. What this has happened is put this community on essentially a blacklist of Fannie Mae, Freddie Mac, and saying that any unit in this unit we will not lend it to. All right. And so the people that want to sell in this community will either can't go find a buyer for a traditional mortgage sale. They have to go through like some sort of private lender or something to be able to be okay with the HOA not having full coverage in the event of a catastrophic event. Right. So what that has happened is that has dwindled down the buyer pool to people who are okay with using non-traditional mortgages. And so the sellers are going to have to be like, well, then I got to cut my prices because I now have limited people that I can sell this property to, right? Yep. So this is already taking an effect. I already have multiple people call me in various areas throughout California saying their HOA is underinsured, and and the traditional buyers can never get approved because the lender is not going to be okay with the HOA being underinsured, right?
Correct. Yeah, I'm seeing that as well. And the other thing I'm seeing is HOA dues and monthly fees are going up
Right.
very, very fast. Just try to
Very, very fast to cover, right? If you are able to find a policy, then it's going to be extremely expensive, and those costs get then passed on to your HOA dues, right?
correct. And the problem is people who buy HOA, I mean, from a real estate agent's or broker's perspective, the people who buy condos are usually first-time home buyers.
First-time home buyers.
They can't afford, $1 million, $2 million, $3 million home. And so as a result, what they're doing is they're buying it. So because they're first-time home buyer, their down payment is smaller, right? Their qualifications is closer to the max, whatever it is that a lender is willing to give them for a loan. And then you tack on an HOA on top of that. A lot of what happens is if an HOA is $500-$600, it literally causes these people to fall out of qualification for the home loan because their debt to income ratio now is out of whack, right? And it doesn't take much. I mean, sometimes just a couple $100 can knock them out of qualifying. And when HOAs are $600, and the thing is, I've seen communities where HOAs are $650 and there's no amenities.
Yeah, it's all insurance.
Yeah, there's no amenities. And the thing is I'm like, no private gate, no swimming, no pool, no gym, right? No tennis courts. Like, I can maybe understand at 650 if you have a ton of amenities, right? But these communities have zero amenities.
Yeah. So people are like buying in townhomes or condominiums. Where's all our HOA going to? Well, it's pay insurance because insurance is ridiculously expensive.
Yeah,
right?
and it's not just insurance. It's also like, because I sit on the board of the HOAs that for my properties. And the thing is, we have, like, I see all the budgets, I see everything. And the cost of maintaining the community has gone up so significantly, from water to general utility areas to maintenance of the landscaping and all of that. And it's just, yeah, I mean, the reserves are just getting smaller and smaller. And then it gets to a point where the HOA board has no choice but to raise it.
Has to raise it or do a special assessment. I've gotten a lot of calls complaining from homeowners complaining about special assessments, right? It's just one of those things that, again, increases the cost of owning a home in California. It affects, as you mentioned, lower income people who want to try to get into the real estate market, right? If you're a multimillionaire, honestly, like something like this, yes, it hurts financially, but you're going to be fine, right? It's really the people that, first-time home buyers trying to get into this, right? Condos are usually what people buy first, right? No one's buying a single-family house right off of graduating college and working for a few years, right? So they're starting from condos. And if they're already paying a high mortgage, a high HOA fee, it's going to severely limit what they qualify for, right?
Yeah. And then the problem also is when you have a $600 a month HOA, because you have less buyers, now your property value it just tanked.
Now, there's two routes to what we're talking about, right? Some people view it as, well, if it makes it harder for people to buy houses, does that mean there's going to be less demand, right? And that means there's going to be a reduction in home prices, right? If I can't get coverage for my $2 million house, right, because there's a cap, right, then am I going to have to, then can I, maybe have to sell it for less than, and maybe that's going to cause a decrease in home values. I don't know, right? Or is the home values, because of these high insurance rates, are still going to be very high?
Yeah, I mean, I think at the end of the day, the cap they said was $3 million, right? So $3 million.
The 3 million, I want to know exactly, is that, again, I mentioned, is that replacement value or is cash value? Okay. I rarely see policies where the insurance company is going to pay you the value of your house. Okay. It's
Yeah.
always to rebuild your house.
Replacement value, a 3 million maximum. How's
Okay.
that?
So I
Right?
don't know how much it costs to build a house, but I think it's for a $3 million replacement value, that's going to be a very big house.
Very, very big house. Yes. Yeah. So the thing is so what my point was that I was going to make was most homes in San Diego don't fall into that classification. I mean, the median price home in San Diego is roughly about $1 million, which is still very, very high compared to other parts of the country. The thing is that at $1 million though, at least, I mean, there's still a few insurance companies, AAA, Mercury, still private insurance that'll cover it. Our premiums will go up definitely for those. With regards to the FAIR plan, yeah, it's less coverage, more money. But at the end of the day, I mean, we don't have a choice, right? Californians have to live here, and we have what we have.
See, that's an interesting question, right? Insurance technically is always optional. It's the lender that is forcing homeowners to have to buy insurance, right? You theoretically, if you bought a house in cash, you don't need to buy insurance, right?
True,
right? You assume the risk, right? There's a lot of wealthy people that buy real estate in cash and they say, I'm going to self-insure. That's what the self-insure means. In the cash, I'm going to cough up the replacement value, because I have a pot of money sitting there that I can use to rebuild if my house gets, destroyed.
Okay.
Right. So, it's the lenders who you are borrowing money from that is saying you need to have insurance because I'm lending you this money to buy it. And in the event there's no more house, I want to know that you are still going to be able to rebuild this house. So
I don't lose my shirt, right? Yeah. Absolutely.
So it's the lenders that technically in your mortgage documents requiring you to have an insurance policy in place to close escrow when you actually buy a house. And I think that's what people need to understand, right? Now, it's always a good idea to have insurance, right? Right. There are some people, like I say, very wealthy people who self-insure. That's because they have a lot of money. But if all your net worth is in your house, and if something was to happen to this house, right, you take a substantial hit to your net worth. So it's still a good idea to have insurance, right? Now, there's ways to adjust the cost of insurance. This is something that I want to focus viewers on, right? You can always say, I want a higher deductible. Just because an insurance agent tells you, oh, you need to have this, look at exactly what the term sheet says, right?
Yeah.
If you have a $500 deductible, absolutely your premium is going to be really high because your insurance company is going to start kicking in just at $500 when you spend out of pocket, right?
Yep.
Right? You can ask for, look, I want a $20K deductible because anything that happens for under $20,000, I'm able to pay out of pocket. I don't need insurance to cover me, right? It's only right? That will substantially lower your premiums, right?
Yeah.
Right. If you don't have fancy stuff that you need insurance, your personal property protection can be lower, right? So there's ways to adjust the premium rates. You just need to tell your insurance agent, right? Insurance agents work on commission, right? So there's a reason why they're probably selling you a very expensive policy, right? But if you know how to say, look, I don't want a $500 deductible. I want a $20,000 deductible. Okay. I want to lower the payouts, because I have other funds that can bridge the gaps, right? And you can technically then use that to lower your insurance rate to something that's a little more reasonable.
Yeah. I mean, I see insurance kind of as, well, the insurance companies definitely, it's like gambling almost, because they're analyzing profit and risk analysis, right? It's like, how much are we going to charge, and can we make money off of this, and what's the likelihood of us going bankrupt because we insured all these people in a bad area, right? So they're doing that calculation. So you as a consumer should also do that calculation.
Yeah, absolutely. Do the calculations, right? Just because an insurance agent is telling you, oh, this is the coverage you need, is it really? Right? Look at your own personal circumstance. I've done the whole buy insurance. You go on Progressive, or you type in all these things, right? Or you can go from a broker, and they will tell you, right? But again, you should also know how to move around some of these numbers, right? So
Yeah.
that it fits within your budget.
Yeah.
Just know that if you have a higher deductible, you're going to be paying that, right? And that's why I say if you have a higher deductible, make sure you have that deductible amount in like a savings account, right? So that you know that that's going to be used towards like fixing a leak or something like that, because a leak isn't going to be $20,000, right? So insurance isn't going to be covering something like that. Right?
Basically, you're buying devastation insurance.
Yeah, right.
Yeah.
So I think viewers, it's a good idea to, again, when something like this happens, really take a look at your insurance policy. Some people are like, "What? I'm paying a premium on a $500 deductible or $1,000 deductible. I want to increase that deductible because."
So Eric, let me ask you this question: if you were one of these people in the Pacific Palisades, and you had a $3-4 million house that just burned down, right? And your insurance policy, let's say, wasn't adequate, what would you do in this situation?
Well, I look at my insurance policy to see what is going to pay, right? If my cost of rebuilding, okay, that the insurance company is going to give me is pretty around the same amount, right? I would probably, some insurance companies these days I have seen, they just give you the money. You do whatever you want with it, right? I've had some clients call me and basically say, I'm going to just abandon this piece of land, right? I'm going to take the money and just, and let the bank foreclose on it, right? There has been some clients that have said that that's the route they want to take. I said, that's fine, right? Because as long as the insurance company is okay with it, because the insurance company, whenever they pay out any money, they have to sign off on it too, right? Otherwise, if your entire net worth is tied up in this house, you basically have to rebuild, right? You cannot just let go. And I probably would just rebuild, right? I'll save up the money. I will, it's going to be a long endeavor, and it's just one of those things, right? You just got to have to rebuild, right?
Yeah, I think most residents will probably end up choosing to rebuild because that's where they lived, and I can see that happening.
Yeah, I probably would be in the same. I just have to rebuild, right? And
Yeah.
it's just going to be a very long, tedious process.
Painful.
I know a lot of clients would call in there in the cleanup phase right now, getting rid of all the debris, right? I
Yeah.
would probably communication with the claims adjuster, getting all that ducks in a row. I would probably start sending out some feeders to contractors or home rebuilding companies, because you want to get them lined up before there's all these other people getting them lined up, right?
Yeah. Yeah, the cost of construction in that area is going to
Construction is really high, right? But again, a lot of these things can't be done because I know a lot of the basic utilities are not even hooked up. Any like electrical, plumbing, and all that still needs to be done from. So rebuilding is, I think a majority of homeowners are going to choose to rebuild. Just expect that it's going to be multiple years before something substantial happens.
Yeah. Well, I appreciate you jumping on and having this conversation with me because I know there's going to be, hundreds of thousands of people that will, be impacted, and hopefully some of them will see our video and get some good tips and advice about it. And if anyone out there has any questions about real estate law, please reach out to us. We are always here to answer your questions. You can follow us on social media. And Eric is here to answer any of your legal questions. And if you have real estate questions, you're always welcome to just jump on and contact us. And we'd be happy to, have a free call with you just to see like an initial consultation. All right. Thanks, Eric. I'll talk to you.
Thanks, Scott. Take care,
in a
guys.
couple of weeks. Bye.
Bye-bye.